Moving on now, key capital market across Africa recorded mixed fortunes in the year 2020. Despite the ravaging impact of COVID-19 on the African economy, the Nigerian stock market surprised on the upside, outperforming global stock markets in 2020. According to a Bloomberg report, and posting an approximately 50% year-to-date return due to improved liquidity in the economy made possible by the Central Bank of Nigeria. Having posted a booming record growth last year, there are projections that the Nigerian equities market will still end the year 2021 on a positive territory with intermittent profit-taking in the post-COVID-19 era. With the nation's capital market outperforming its peers across the world by pulling 8 trillion naira investments in 2020 and about 5 trillion naira deficit in the 2021 nationals or the nation's budget to be financed by foreign loans. Economic experts have called on the federal government to explore the booming capital market to fund infrastructure development across the country. To speak more on this, I have joining me live from our Abuja studios is a professor of capital markets and president of the Association of Capital Market Academics of Nigeria, Professor Uche Uwaleke. Thank you very much for your time. Happy New Year to you.
Yeah, thanks very much, Tolu, and Happy New Year to you as well.
Prof, I saw the figures coming out from our stock market late last week and what we've been following before now. It looks too good. It's different from what is happening in the wider economy. So what is happening? Take us through why these figures look so good, despite the fact that it was basically locals that played in the market.
Yeah, Tolu, what I call the tide that lifted all the boats in the market, especially the equities market, happens to be the favorable policies that came out from the Central Bank of Nigeria. Policies that tended to engender, as it were, a low interest rate environment. And because fixed income returns dropped, investors' preference naturally, of course, shifted to equities. So you find that, yes, domestic investors, dominated transactions in the markets all through 2020. But what motivated them, the major driving force, was the fact that investment in equities, became a lot more attractive, given the low yields in the fixed income market. That was the major thing. And of course, you can also cite the favorable news, both global and local, that also rubbed off positively, on the market as a whole. So essentially, we are talking about CBN policies. We also are talking about the fact that oil price didn't disappoint, with reference to the budget benchmark. Oil price has been above $50 per barrel in recent times. And again, the fact that in Nigeria we were able to contain the first wave of the crisis. The COVID crisis didn't hit us as much as it hit other parts of the world. So you look at interventions by the government, interventions by the Central Bank of Nigeria that tended to inject a lot of liquidity into the system. And of course, when you have a lot of liquidity in the system, interest rates drop, and then part of that liquidity, tends to flow into the securities market, the equities market. So that's what we saw, and that's why the Nigerian stock market appeared, to outperform, other markets, not only in Africa, but in the world. But again, it also points to something. It also points to the fact that our market is, highly risky, because in finance, returns also go together with risk. The fact that we return the highest, about 50%, globally, also means, that the risk in that market is equally high. And to provide evidence of that, you need to look at the composition of the sectors that actually, gave rise to this superlative performance. If you take out the industrial sector and you take out the telecom sector, I'm talking about if you remove Dangote Cement, you remove Boa Cement, for example, you remove MTN, you remove Airtel Africa Telecoms, and in the banking subsector, you pull out GT, you pull out Zenith Bank. Of course, you now see that the market will crash. So a situation where you have just about 6 companies, mainly those of them are on the premium board, accounting for over 50% of market capitalization, which now is in excess of 20 trillion. Is quite risky. So it still shows that our market is, very concentrated, and there has to be a deliberate effort to diversify the, issuer base such that it reflects the diversified nature of the Nigerian economy. As you know, Nigerian economy is a lot more diversified now, than we thought following the rebasing exercise, and the market should also reflect that. Such that our market can be a true barometer, of the economy.
Very important. In 2020, African equities capital market activity saw some downward turn, but an increase in domestic investors replicating the pattern of 2019 despite the COVID-19. Now, my question is this, Prof. In your assessment, what do you make of the performance trajectory of the capital market and your forecast taking into consideration the second wave of COVID-19? Can the Nigerian market sustain this bullish trend? Professor Uwaleke, did you get my question?
Well, I didn't get the last part of your question, but you were talking about forecast.
I was talking about the second wave of COVID-19. Can we sustain this bullish trend with that on the side?
It's doubtful. Even beside the COVID, the point is that the market has gone up. And usually when markets go up like that, studies have shown that it's quite possible that you have some stocks becoming mispriced, some stocks being priced above their intrinsic value. So what happens usually afterwards is a market correction. So the market has the ability to correct itself. That's also speaking to resilience. Our market is resilient, yes. It has the ability to correct itself. So I see some market correction taking place in 2021, market correction, by way of profit taking. We've seen some glimpse of that even early in the year. The market gained, equity segment of the Nigerian market gained over 2%, on Monday, and yesterday the market fell. So, people saw the need to take profit. So I see, such taking place in 2021. You've seen the numbers with respect to GDP growth forecast. The World Bank is now revising their growth forecast downwards, to 1.1%. Earlier to the IMF too had 1.7%. So if you look at those numbers, they tend to be lower, far lower than what we are projecting in the budget, which is 3%. The central bank also has a more realistic forecast of 2% real GDP growth rate for 2021. And all of that will be, of course, a function of what happens to oil price. That you can't, really, predict. But if we go by what the energy agencies are saying, international agencies are saying, oil price looks to stay above $40 per barrel on the average, in 2021. But the major determinant factor, in my view, that will shape macroeconomic performance in 2021 will be this pandemic. So the extent to which it is contained, again, the response to it will also determine. If you look at the budget implementation report by the budget office, the latest one they have, it talks about the lockdowns, hampering, jeopardizing the implementation of the 2020 budgets, and especially the capital component. So if we again resort to lockdowns in tackling this pandemic, it will affect economic activities. It will further pull the country into recession. So the prospect of coming out of this recession, the prospect of the economy turning the corner, as quickly as possible, because we had expected a V-shaped recession. The finance minister, the CBN governor had talked about the economy rebounding by the first quarter of 2021, and I shared in that optimism. But again, as I said, the response to COVID will be the determining factor. If we respond through lockdowns, the recession will be prolonged, and that will also have a negative impact on our market. Recall that in 2020, when the COVID pandemic came, in March, the index case was announced on February 27th. In March, the market went down. The greatest loss that we had in 2020 was in March, when the market lost about 18%. And then, gradually, started this, recovery journey until the last quarter of 2021, when we now had the strong gains, in the markets. So, essentially, as I said earlier on, it's the COVID. The COVID will play, a major role in what happens to the market in 2021.
Now, with debt levels rising high for most emerging economies in Africa, like Nigeria, obviously, now how much of an alternative funding plan do you think the capital market provides to support key infrastructure development?
Tolu, you know that the role of infrastructure in the African economies cannot be overemphasized. It is at the heart of the African integration. It's at the heart of the AU 2063 agenda, part of which is part of which we have the AFTA, the African Growth African Continental Free Trade Area, okay, and the issue of common currency, free movement of people. At the heart of all this, including the single African air transport market, at the heart of this will be infrastructure. So, except we develop infrastructure, all these initiatives, moving towards the AU Agenda 2063, will come to naught. And what is the state of infrastructure in Africa? Regrettably, it's quite dismal. Apart from South Africa, the other countries, if you look at the other countries, take Nigeria, for example, the stock of infrastructure to GDP is less than 40%. And some estimates say the infrastructure gap in Africa is over $100 billion. If you look at the African Development Bank report 2018, over $100 billion that needs to be invested on an annual basis. And the road access, for example, for Africa is just about 34%. Compare that to 50% you have in other, even emerging economies, especially in Asia. So the point I'm making is that the issue of infrastructure, is key. And then how do we fill this gap, the funding gap? We have relied, Africa has relied usually on multilateral institutions, maybe the World Bank, and regional, maybe the African Development Bank, and loans from China, essentially to fill the gap, and they have not been adequate, and they can't be adequate. We know the World Bank, for example, emphasizes social infrastructure, education, and health. But if we are talking about the economic infrastructure, the one that will now position Africa to meet some of these economic integration targets, then there is need to turn to capital markets. And in turning to capital markets, I want to quickly mention that infrastructure bonds, are key. It's time that African countries, paid more attention to issuance of infrastructure bonds. Now, if you look at Nigeria, for example, much of the bonds we have issued have not been infrastructure bonds. If you look at the report by the DMO, over 70% of the bonds there are general obligation FGM bonds. The real infrastructure bonds there, namely Sukuk and the green bonds, represent just 3%. Yes, I know that part of the FGM bonds, of course, might be in infrastructure. But the point is that for bonds that are tied to infrastructure are not being utilized in Africa, generally. You find, apart from South Africa, perhaps, that where you see agencies of government, issuing bonds. In South Africa, for example, you have the power company that is owned by the government, the Eskom, issues, bonds. You have the South African National, Road Agency to issuing bonds, agency bonds to, for road construction and maintenance. The same with the Airport Authority, of South Africa. In Kenya, Kenya too has done some bonds for road projects, for rail projects. I remember the one in 2011, a bond that was issued, by the Kenyan Railway Authority, Railway Corporation, to finance a rail line for, Nairobi. So these are the kinds of bonds that we should use to bridge the infrastructure gap in Africa. Infrastructure bonds. Now, the other issue has to do with securitization. African economies, African countries should also leverage, unlock the potentials in securitization. And what is it all about? It is simply converting some of the assets that you have into tradable assets. A good example is what is happening now in Malaysia. Malaysia is thinking of having securitizing, if you like, the airports, transferring the assets of the airport into a company that is known as a REIT, a real estate investment trust. A real estate investment trust is a company that is set up to invest in real estate. But this time, what the Malaysian government is doing is to move the assets of that company to a real estate trust. And the real estate trust will now issue shares to investors who will invest in that real estate trust. Of course, they will get their returns from airport user fees that are collected. So that way, the government of Malaysia is financing airport expansion, airport maintenance, through that means. So the government of Nigeria.